Okay, welcome to Eyes Opening FX. So today we'll be talking about what a PIP. What is a PIP? Now, this PIP is very important in trading. This is basically you have to understand this PIP in order to be able to what buy and know your actual value in that buying area, and know the actual value where you will take profit, and know the actual value where you what your set what your stop loss. All right. Now, here a pip is the smallest unit which a currency pair can be what change. This is a simple term of what, or this is the simple definition of what pip. All right. Now, this pip is the what is the bedrock of what trading. All right, of any pair in the market, of any pair in the market. So you have to understand this pip in able to what know the actual value you are buying that currency or whatsoever you are buying. Now let's say for example you buy gold at the rate of what $2,000. All right. So you as you bought the gold $2,000. Now you want gold to rise up to what $3,000 so that you will make profit of what $1,000, and you don't want gold to depreciate. All right. So if gold depreciate, what would you do? Now, since you bought gold $2,000 and gold started what depreciating, so it depreciate from $2,000 to 1,800. So what do? You sell it at that rate. Why? Because you and maybe your instinct is already telling you that okay, gold will depreciate more. So and maybe it will get up to 800 or 400. So at that exact time, what do? You sell it, right? As you sell it, you are able to save yourself, but make a loss, but not much. You lost what $200. All right. So if now as you bought the good what continue rising and gets up to what the expected amount, which is what $3,000, you have made a profit of what $1,000. So the process of losing and you're able to sell is what the use of what we call a stop loss. The process of what since you bought good at 2,000 and you make a profit of what 1,000, that is 3,000, all right, before you sold the good to someone else. Again, you're able to make a profit. That's what we call take profit in forex market. So these are just the simple terms in understanding it. So this tip we are talking about is a major thing that all currency or all pairs has. Now, if you talk about Euro USD has its own pair, the particular level that it is now, Euro against what US dollar. All right. So if you look at the chart of Euro USD, you understand that the pair. Now let's use here. Now you understand that the pair is actually what at what a level which is the exact level of this pair is 1.0162. So that means euro against USD is at what 1. What 0162. So that is the value of the what of the pair of the two together. So now let's write it down. Since we said that this pair is at what, okay, 1.0162. 0. So now we calculate the pips from this side to this side, all right, on this particular pair. So now if, let's say for example, you are asked, okay, add extra 4 pips to this pair. So 4 pips, what you will do here is that it will become 1, add 4 pips to it, it becomes 0.004 to become. Now this 0 is the first decimal number, the second, the third. All right, so you will calculate your pip from this fourth one, based on this Euro USD, based on this particular pair only. All right, so that is this. The 0 plus 0 is 0, 1 plus 0 1. All right, that means here what you actually get here is 1 is a 1.0. You have 0 here, you have 1, you have 6 here, you have here this last one, 1 2 3, 2 plus what, 4 is what, 6 again. So you're able to get what, a profit of what, c of what, 4 pips. So your profit here now will become what, 4 pips. Profit is what, 4 pips. That is your profit here. So adding 0.00 profit to this one, the number will become this. All right, so this is the actual value of your what, your profit, the number. So the same thing applies to your what, your stop loss. So if your stop loss is still what, 4 pips, instead of addition it becomes subtraction. So if you don't want this pair to go, let's say for example when market was around this area, you don't want it to what, go higher, more than this level, what do? You set what, your stop loss at what, a particular level, let's say for example around this area. So anytime market get to this level, that is when you what, you take what, market will what, it will stop you out, because why, you set your stop loss at that particular level. Now if you what, you take a buy from here, you take a sell from here, sell from here, now your profit is this low. That actually means that you have gained enough profit from this very high to this low. So you will add your profit to the entry level. That will tell you what, your actual value, or the actual value where you what, you took your profit. So that is what we mean by what, a pip. Now, so arrow pips is being calculated in 4 decimal places. So once it's more than 10, it will go to the next line, to the next what, to the third, the second decimal place, the third decimal places here. So if it's up to 10, it will go to this area, from there again to here, from here again, from here to here. You understand? So that is how what, the profit, the pips move. All right, depending on what you're actually doing at that particular area. So each currency has their own calculation of what, pips. So but with this example, you can actually what, do more in understanding other currency. Let's say for example GPP, uh GPP what, USD, which is this pair. Now the actual value of this pair now, the low of it is what, 1.18761. All right, that is the what, the low of the what, candle. So that is the low of it, but the exact number where this pair is now is, you can actually see it here at your left corner here, at your right hand corner here. So you see that the value of it is what 1.19005. All right, so four decimal place, the fourth number here, that's where your peak what we start counting. That's where you start counting your peak. So that's where you start what counting your peak. The same thing that we did on Euro USD. All right, so that is your what your peak counting. So you can actually calculate all currency pairs in terms of what their pips, and you can actually use it to what calculate your profit, your stop loss, your entry level, and everything relating to what your stop loss and what your take profit, even what your buy limit and sell limit. So now let's explain what we mean by sell limit or buy limit. So buy limit is actually knowing that market will continue depreciating, market will continue going down. All right, you know that market will continue going down, but at the moment the market is at this area, but you know that it will get to this level before it will start what going up. So you set your buy limit at this level. When market get to this level, it will activate your what order and go into your what your favor. So it become what a profit. So that is what we call by what that's what we mean by what buy limit. So why sell limit is actually knowing that the pair will continue buying until it get to that certain level and what continue going down. So you expect market now to continue what going up until it get to your what that particular level you're expecting price. It will activate your order. So you will place what a sell limit at that level, and it what market will continue going down from that particular area. So that's what we call what your sell limit. Now we showed you from the previous class, so I will also show you today. So that is that. Now we have what we call buy stop. All right. So these are the things that we do use in buying or selling in forex market on your what on the platform that you are using, either this for trading view or your MT4. All right. So just like I explained, buy limit. This is what sell limit. All right. We have what we call buy stop and sell stop. Already now you know that market will continue going high, going up. That is buy. Up is buy. Sell is down. All right, that is the simple term for two of them. So buying means what up, selling means what down. So if you know that the market will continue buying, but you are not too sure if it will buy around this area, but you are sure that it will continue buying once it get to this level, what you do here is what you set what a buy stop at this particular level. So once market now get into that level, it will activate your order and continue into your what your favor. That's what you call what a buy stop. All right. So the same thing for sell stop. So sell stop actually means if let's say market is selling, now you are not too sure if it will get to this level. So if market now go below this low, that means it will continue selling. So what you do, you set your limit at this, your sell stop at this very particular level. Sell stop, I meant. So you set your sell stop around this particular level. So once market now get to this particular level, it will activate your order and continue going in your favor to the what downside, which is what the bearish market, according to what we explained. So we said bear means what sell, bull means what buy. All right, long means what buy also. Short means what? Sell. All right. So those are the things that we have explained from the previous session. So that is that. Why instant execution actually means if you are trying to buy at this recent level where price is now, you will buy from there. That is instant execution. If you are trying to sell at that instant level, you will sell. Market will continue selling in your favor. So that's what we mean by what instant execution. It means you are what placing the trade at that particular level where price is at that what moment. That's what we call what instant execution. So those are the things that you need to understand about pips and what your MT4. So on this MT4, you can actually see your what your bid price, which is the recent price, the recent level of that what currency. You can actually see USD against Japanese yen, USD against what Swiss what francs, Swiss what francs. That is CHF, CHF. Euro against what USD, GBP against what USD. So we have all these currencies here, all right, and you see their what their bid what price and their what ask price, all right. So basically, this ask price, this is the actual level that the broker, which is what you are, without the broker, you can't have access to what to trading. So you must what you must go through them to be able to what to make money through trading. So this ask price, this is the actual level that the broker is willing to offer you that what that particular trade. All right. So that is the what the ask price. Why the bid price is the actual value of that currency. All right. So there's a little what a little difference between two of them sometimes. All right. So that's just it about bid price and what ask price. Okay, so this is New Zealand dollar. Now here we have the instant execution and pending order. So if you change it to pending order, it will give you a buy limit, sell limit, just like we explained. Buy stop and sell stop. You have a buy stop limit, sell stop limit, and all. So from here, you can actually have what we call volume, which is what your lot size, the actual value, the amount you are willing to risk on your what on your account. All right, we explain this lot size uh, with time so that you understand it better. So at the you can actually add let's say for example uh, uh, one lot here as the volume. Then your expiration date, you can add a expiration date. Let's say for example today, only today. If the trade didn't activate, let's say for example it's a buy limit or buy stop. If the trade did not activate today, the order will what will cancel. So you can actually set it everything here. So here is what your take profit, the actual level that you are what based on what your PIP calculation and everything. So the actual level you're expecting market to what to hit before you take profit, either in the upside or in the downside. So that level, once market get to that particular level, market will what we hit that level and what it will close the trade. So that is what we call take profit. Now here is what your stop loss, the particular level you're expecting market. If market get to that level, it will what close the trade in loss. That means what you lost the trade. So that is what your stop loss. Then this is what your price. The particular level you are setting your limit order. The particular level you are setting your what your limit order. So that's just it. So you can actually put it in what in instant execution. Place your volume either in Oxy dollar, your cable, or any currency you are using, or any market you are actually trading. So you can place any lot size here based on your account and what your leverage and everything. So you can place your limit, then you tap buy or sell. And let's say for example, if the market is bearish, you can actually tap sell. It will open the order. You can actually see it here. It open the order, tell you that you are selling with one lot on the account at this particular level. So if the pair will continue bearish until it get to your particular TP level, once it get to your particular tip level, market will close at that level in profit. So if you set your stop loss above it and you don't want market to go above that level, market will get to that particular level and what close in loss. So that is what we mean by what profit and what stop loss. All right. So that is all for today's session. So we'll be explaining more of them uh, in the next series.